Here are the 5 things investors should be aware of when starting to invest for the first time. Number 1. Research. It is crucial to thoroughly research any investment opportunity before committing your money you worked hard for. Look into the company's financial health, management team, and the industry trends. Remember, knowledge is power. Number 2. Diversify your portfolio. Putting all your eggs in one basket is a recipe for disaster. Spread your investments across different asset classes and sectors. This diversification helps reduce risk and provides a cushion against market fluctuations. For example, choose 5 sectors to invest in and invest evenly in those stocks. But remember, you can always allocate how much you prefer to put into each sector or individual stock. Please hit that subscribe button. I do appreciate it. Now to number 3, keep emotions in check. Investing can be an emotional roller coaster, but making decisions based on fear or greed can lead to poor outcomes. Stick to your investment plan and avoid making impulsive decisions driven by short-term market movements. Emotional investing is not profitable, and that is what we want to help you avoid. Keep emotions in check. Number 4, understand your risk tolerance. Investing involves a certain level of risk, and it's essential to assess your own risk tolerance before jumping in. Consider factors such as your age, financial goals, and personal circumstances. Always invest within your comfort zone. And finally, number 5, stay updated and stay informed. So subscribe now and learn more here. Now you are better prepared to invest with these 5 things to be aware of.